Good evening, guys. You can see time is around 4:30. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis, and we'll discuss Hero Zero trade in Sensex as well. First, let's look at into Nifty 50, guys. You can see Nifty 50 that the market gap down. It was a very huge gap down, guys. And since today is an expiry day, you can expect the market to do some kind of manipulation. If not for expiry day and the market would have gap down, the price would have rallied towards the downside, creating new lows. But you can see the market gap down below yesterday's low as well. And as soon as the market gap down, you can see the market retraced towards the upside, targeting all those sellers who might have entered, sought at these positions. And it faced rejection from 21 moving average and retraced back to the 5-minute zone as well as the middle of the first candle. And here is where the price took support and clearly broke structure towards the upside. So in case if you try to plot the fib extinction levels as the market broke this high over here, and if you try to plot the common point between this to the common point between this to the common point between this, you can see you could have targeted the 100% move. This is the 100% move, guys, where you could have exited your first position here. And the next target would be around 1.68%, but you can see price didn't reach anywhere at this zone. You could have targeted the 200 moving average or the weekly pivot level. This is where you could have exited. So a long position here, keeping your stop loss just below that weak rejection and targeting all the way to 100% move. And you can see after this 100% move, the market again retraced to this fair value gap over here. You can see the market clearly broke this high over here with this fair value gap. And the market retraced back to this low over here, grabbed this liquidity and continued further buying and reached all the way to this 200 moving average, as well as the weekly pivot levels. And if you try to plot the fib extinction levels of this retracement, if you try to plot the common point between this to the common point between this to the common point between this, you can see the market reached almost 200% move, but this is not the proper retracement. As you can see, there was impulsive momentum towards the downside, as well as this was just a fair value grab, liquidity grab, where the market had to come grab that liquidity and continued further towards the upside. And again, the market, after facing some sort of rejection over here, came to this fair value gap, grabbed this liquidity, and now this fair value gap is mitigated. Here the fair value gap is mitigated, and you can see the market again rallied towards the upside. Again retraced back to grab this fair value gap liquidity over here. You can see the market mitigated this fair value gap over here as well. Grabbed this liquidity and continued further buying. You can see by just using this fair value gaps, you can see you could have taken long positions and keeping your stop loss just below this day VWAP support. As you can see here, the day VWAP support is forming some kind of support over here. And here is where exactly the market clearly broke this high as well. But as soon as the market broke this high, you can see the price faced rejection and found a bearish engulfing pattern, clearly showing the shift in market sentiment from bullish to bearish. After this kind of huge impulsive momentum, a lot of buyers might have entered the market, expecting the market to go further high and break the new highs. But you can see the market trapped all those sellers. And this kind of pattern even repeated yesterday, guys. You can see the market here continued, and with this huge bullish candle over here, you can see a lot of buyers might have entered here. And you can see following candle, bearish engulfing candle, and this same pattern repeated over here as well. And you can see the market retraced and formed a lower high and continued further towards the downside. And the same thing happened here. The market broke 200 moving average towards the upside, the blue line over here, bearish engulfing pattern, and broke 200 average towards the downside, clearly changing the market sentiment from bullish to bearish. And the last up move before the down move, where it broke structure here, you can consider this to be a chalk. So this is the chalk, guys. So if you try to plot the order block level over here, this is the last up move candle. So you can consider this to be a 1-minute order block. And in case if you try to plot this swing over here, the high to low. So if you try to plot since both swings are of blue candle, the high and low, you can see price rejecting from the 0.5 as well as the 0.6 level over here. There are three confluences here, guys, why you should have taken long short position. You can see When price retraced to this point of interest, you can see there wasn't aggressive momentum towards the upside, where the market head towards the upside, consolidated, and finally reached here, faced a rejection with this uh, dodgy candle, guys. You can see how beautifully the rejection of price took place over here. As soon as that rejection, you could have entered short position here, keeping your stop loss just above that candle and targeting the fib extinction levels, the common point between this to the common point between this to the common point between this. This is 100% target. Or in case if you use the this order block level, so if you consider this common point between this, you can see you could have targeted the 1.68 level or the 100% move, or you could have targeted all the way to this level, guys. You can see the price rallied all the way to this zone, but again it rallied towards the upside, faced rejection from the 200 moving average, again aggressively sold towards the downside, and here it formed a rounding top pattern, clearly showing signs of bearishness. So you could have entered short position here, targeting all the way to 1.68 level to this zone, guys, or you could have targeted this fair value gap also here. Here the this zone was not properly mitigated, so you can see how the market came here, mitigated this zone, and continued further towards the upside. And you can see here the market clearly broke this low, forming a chalk over here. But you can see this kind of selling, guys, is not an aggressive selling. You can see there is all zones have been mitigated and there is no fair value gaps over here. But in case if you want to consider, you can see you can consider the last up candle over here. So the last up candle is this candle, guys. This is the 1 minute order block. You can see the market came here, mitigated this order block, and continued further selling towards the downside. But this selling didn't break this low, showing a strong demand over here. So you can consider this zone as a very strong demand zone, because after facing rejection from this 200 moving average, the price rallied towards the downside, but it couldn't make a lower low here, clearly showing some kind of support here. And you can see after the price reached this zone, you can see a bullish engulfing pattern over here. And after this candle, you can see two dodgy candles showing a trendline liquidity pattern form. You can see this kind of pattern, guys, which clearly signifies bullishness. And you can see you could have just entered your trade right here, guys, keeping your stop loss just below that candle itself. And after seeing this kind of dodgy candles, you could have entered, keeping your stop loss just below that candle and targeting towards the upside. You could have targeted this swing over here or this swing, or you could have targeted all the way to this swing as well. So you can see price went all the way to this side. And this is a hero zero trade setup, guys. Or in case if you might have missed out on taking your trade at this moment, you can see after the market retraced here, clearly formed another bullish engulfing pattern and broke this 9 as well as 21 moving average, as well as this is the day VWAP level towards the upside. And after this break of this structure, you can see price facing rejection from 9 and 21 moving average, clearly showing signs of bullishness. And whenever you can see price consolidating between the 9 as well as 20 above the 9 and 21 moving average after the initial breakout, you can expect a huge momentum towards the upside, guys. So you can see here the market consolidated above the 9 as well as the 21 moving average. And here also the market consolidated between the 9 and 21 moving average, and even 200 moving average acted as a confluence over here. Again, the market broke towards the upside, retraced back here. It took support from the 200 moving average, 9 as well as 21 moving average, and price couldn't cross this 21 moving average here as well. So you could have just hold on to your trade, guys, when price is consolidating above the 9 and 21 moving average, and you could have targeted all the way to this high. Or in case if you try to plot this extinction levels, the retracement levels, the common point, the high of this candle to the low of this, you could have targeted the 2.68 level or the 1.68 level over here, or you could have holded on to your trade. This is about my trade analysis, guys. You can see here how the market has behaved. This is the 1 minute order block. You can see the market sold towards the downside but couldn't make a lower low and formed a bullish engulfing pattern, clearly showing signs of bullishness, guys. And this was one beautiful trade setup where you could have taken, and this was another good setup, guys, where you could have holded on to your position and made a decent amount of profit. And you can see here price moving in a haphazard manner, but you can see how the market is trying to mitigate all these fair value gaps and showing some kind of momentum. In case if you might have taken short scalps, you could have easily taken here, expecting the market to go further towards the upside. But this is about my Nifty 50 trade analysis, guys. And you can see after this momentum, the market kind of consolidated in a sideways manner, which doesn't show any confluence over here. Now let's look at into Bank Nifty. So in Bank Nifty, so this is a weekly pivot level, guys. This is a daily pivot, and you can see the market gap down. And as soon as the market gap down, you can see a rally towards the upside, clearly showing signs of bullishness. The market clearly broke the first candle's high. Whenever the market breaks the first candle's high, clearly showing signs of bullishness, guys. In case if the market breaks the first candle's low, it shows bearishness, and if case if the market breaks the first candle's high, it shows a bullishness. But in confluence with price action, you should trade less. You can see the market rallied, took support from this 5 minute zone over here, and rallied towards the upside. And here it faced resistance, formed a bearish engulfing pattern, and continued all the way towards the downside. But if you can consider this swing movement, guys, of this initial swing, which actually broke structure towards the upside. So if you consider the last high of this, the common point within this, to the common point within this, you can see the price taking support from 2.36 level. As I mentioned you earlier, guys, whenever you see some impulsive momentum towards the opposite direction, you should always plot these 2.36 levels in case if this level shows some kind of resistance or what. This I will show you in Nifty 50 as well, guys. Wait a second. So in Nifty 50, as you can see here, as you can see, guys, this impulsive momentum towards the downside, and the market retraced very impulsively towards the upside as well. So if you try to plot the fib levels here, the common point between this to the common point between this, you can see the price here, guys. The common point between this, you can see the 2.36 level over here, guys, where price is facing a lot of resistance over here, 0.236. And this is where you could have taken short position and targeting this swing lows. Here is where it faced resistance as well as the 200 moving average resistance. And in case if the market broke this level, you could have exited at this order block levels, or in case if the market closes above this order block level. And you can see how the market has behaved, guys. The 0.23 level, which acts as a confluence for you to take long or short positions. And you can see this 0.23 levels, which acted as a support. So in case if you try to plot the fib extinction levels, the common point in this, to the common point in this, to the common point in this, you could have targeted the 100% move. And you can see the market came all the way to this zone, guys. Or you could have targeted as long as the market crossed this 21 moving average over here with huge bearish momentum. Or you can consider this after this huge final sell-off candles, guys, which actually broke structure towards the upside. You can see how the market clearly broke structure over here. This is the breakout structure. And after this breakout structure, the market, in case if the market sentiment would have been very bullish, no, guys, the market consolidated in this way after breaking structure and clearly broke structure towards the upside. In case if the market sentiment would have been bullish, the market would have retraced and continued further buying like this. This is usually how the market behaves, guys. But you can see here after this final sell-off candle, you should always mark the low of this huge final sell-off candle, guys. Once if this low is being broken, you should take short position and expect the market to go further towards the downside. But you can see the market rallied towards the downside, but again took support from weekly pivot levels over here. This is the yesterday's pivot level, or you can consider the weekly pivot level. As soon as the price touched this weekly pivot levels, it formed a bullish engulfing pattern, clearly showing some kind of demand. So in case if you might have entered long position, you could have entered long position looking at this candle itself, guys, and keeping your stop loss just above and targeting this high over here. That's how you could have traded, or you could consider this order block level. So you can consider this zone as an order block level, and you could have plotted the fib of that order block level, and you could have targeted till the 350 level over here. This is how you could have targeted it. This is about my trade. And here, when price retraced and formed some kind of rejection candles, and the price mitigated this fair value gap over here, and that's where you could have taken another long position, keeping your stop loss just above. Or in case after this candle also you could have taken, guys, once if this candle broke towards the upside. Or you can see this kind of support over here when rejection of price and price closed above this anchor VWAP level or day VWAP level, you could have continued all the way towards that zone, guys, or the 100% move somewhere between that zone. This was another setup where you could have taken short position. And you can see here, after this recovery, you can expect the price taking support here and continue further towards the downside. But you can see here, the market here failed to make a higher high, again broke structure towards the downside, forming a lower low. You can see clearly the market broke this structure, and you can consider this to be a chalk. And if you consider the last up candle before the down candle, you can consider this candle, guys. This is the 1 minute order block. So the market again retraced back in with a lot of hesitation, reached this 1 minute order block and continued further selling towards the downside. and clearly broke this low as well, forming a breakout structure here. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this, you can see the market here was not able to cross this 0.5 as well as the zero point 0.6 level over here. This is the fib 50 level, the golden zone ratio. And in case if you try to plot the anchor gap levels of the swing high structures over here, let's try to plot this swing high. You can see after this huge break of this candle towards the downside, which broke the anchor gap level as well as the 9 as well as the 21 moving average towards the downside. You can see this, guys. The rejection of price over here, the 50 level, and this huge bearish candle, solid Marabuzu candle with no wicks, breaking this towards the downside, breaking the anchor gap level as well as the 9 as well as 21 moving average, clearly showing signs of bearishness, and you could have just taken your short position there, keeping your stop loss just above that candle itself and targeting all the way towards the downside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move over here, or you could have targeted all the way to anchor wave support over here, the day wave support. This is the weekly support, guys. So you can see as long as the price is trading above below the 9 as well as 21 moving average, you could have ride it. That is another confluences, guys. So some people might have exit looking at this 200 moving average support, the day pivot, the day VWAP level support, or the pivot level support. But what we need to see when you ride a trend is that you should always look at 9 as well as 21 moving average. As long as price is consolidating or moving above the 9 and 21 moving average, you should try to hold on to your trade. And you can see price rallied towards the upside, and you can see price facing some sort of rejection. If you try to plot the common point between this to the common point between this is the 50 level. But you can see after this 50 level, the market here should face some sort of rejection here, continued further selling towards the downside with huge impulsive momentum like this impulsive momentum. But what happened is that you can see this momentum was strong enough when compared to this consolidation, guys. You can see there was a band of consolidation like this, and the market was moving in a zigzag manner and failed to make a lower low as well. And here you can see rejection candle of price from this level, clearly showing signs of bullishness. And in case if you can see here, you can see the market even broke this high here, forming a internal chalk over here, and this rejection candle, guys. So in case if you find this retracement over here, the common point between this to the common point between this, you can see the 0.23 level where the price came all the way to this level and faced some sort of rejection. This is a 0.23 level, and you could have entered long position at this candle itself, guys. So if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move here, or the anchor wave up level support, or the 1.68 level, or the 2.68 level. You can see price came all the way to this zone, and this is where you could have exited. This is the 2.68 level. And you can see the market rallied upwards, and this was the 100% move, guys. This was 100% move, or the 1.68 level. But here you can see the market face some sort of rejection because of this order block level here. This I will mention to you. You can see the last up candle. So you could have targeted the order block level. This is the 1 minute order block. You can see the market came all the way. You could have exited, guys, here itself. So long position here, keeping your stop loss just below the anchor day VWAP level support and the order block level. This is how you could have traded. And you can see again a market face some sort of rejection. In case this impulsive selling was not towards the downside was not strong enough, you could expect rejection of price from these levels and further selling towards the downside. But you can see this kind of selling also is not strong enough, guys. Clearly showing signs of bullishness itself. You can see this impulsive momentum and this kind of liquidity over here. And the price clearly continued further towards the downside. Here you can see the 9 as well as 21 moving average clearly broken towards the downside, and price continued further towards the downside. If you consider this whole swing, so if you try to plot the common point between this to the common point between this, you can see the 0.23 level, guys. If you consider here again, the price took support at 0.23 level and found a bullish engulfing pattern over here. You can see how the market here, as the market sentiment was bearish only here, you can see the market formed a bullish engulfing pattern over here. In case if you're very cautious of how you need to trade, you could have easily taken after forming this kind of bullish engulfing pattern over here. But you can see the market forms a certain market formed a chalk. And if you try to plot the common point between this to the common point between this is the 50 level where price took support over here. And after this kind of impulsive momentum, you can see this kind of retracement, and price took support from this day. This is the day pivot levels, or you can consider this as an anchor wave support over here. So let's not take that. You can see rejection of price from 200 moving average as well as a 350 level. I think this too is enough, guys, for you for better confluence. If you try to plot the anchor way up level here, you can see price taking support here as well. So if you could have taken a long position here, keeping your stop loss just below this 200 moving average and trying to plot the fib extinction levels, the common point between this, the high of this candle to the low of this. So you could have targeted all the way to this 100% move. This is the 2.68 level target, and this is the 100% target, guys. You can see how the market here came all the way to his 100% move. There was another extra momentum towards the upside, but here you can see after this kind of momentum, the market faced some kind of engulfing pattern over here. This looks like a final sell-off candle, and the market clearly head towards the downside and even closed below this low where the initial momentum started. You can see this low as well. And this is where you could have targeted, guys, the long position here and keeping your stop loss just below that candle. This was one trade setup where you could have taken. After this kind of bearish engulfing pattern, if you try to plot the anchor wave support here, you can see if you try to plot the fib levels, the count point in this to this, you can see this is the 550 level, guys, where the price rallied towards the upside. But what we need to keep in mind is that this kind of momentum, guys, showed some kind of trend line liquidity over here. See this kind of liquidity. After this bearishness and this anchor wave up level, you could have entered short position after this kind of bearish engulfing pattern, keeping your stop loss just above that candle itself and targeting all the way towards the downside. So if you try to plot the fib extinction levels, the common point in this, to the common point in this, to the common point in this, you can see you could have targeted the 100% move, or you could have targeted all the way to pivot levels or the swing lows, guys. I think it's better to target towards the swing low, or as long as the price is trading below the 9 as well as 21 moving average, you could have traded. Usually during expiry days, guys, the price action is not well behaved. And you can see, guys, how the market here you could have traded 1, 2, 3, 4, 5, 6, 6 trade setups where you could have easily taken the fair value gap over here, guys. Let me repeat once more and make you clear that how each trades have been taken. The fair value gap over here, guys, which actually broke structure. The market came, mitigated this zone and formed some kind of rejection candles. Once if this, after this bullish break of this candle, you could have entered long position and targeting this high or the 100% move, or the 1.68 level of this retracement also you could have targeted. So you can see the 1.68 level of this retracement because there was no clear support, guys. You can see how the market came all the way to 1.68 of this and targeting all the way to this high. This is how you could have targeted, guys. And after that sell-off candle, you can see the market clearly broke and broke this below this low, and the price took support here. You can see this kind of aggressive selling, guys. After this aggressive selling, where you can see price taking some kind of support at these zones and forming a bullish engulfing pattern. Just I'm asking you to take long position and keeping your stop loss just below that candle itself, guys. It's as simple as possible. My stop loss are just only one candle stop loss, guys, and my risk to reward ratio is minimum 9 is to 10 is to 1 ratios. That's my minimum. What I'm teaching you is just one candle stop loss, guys. You can see this after this bearish candle, keeping your stop loss just below that candle. And after this 0.23 level, price took support over here, formed a dodgy candle. The towards the upside, you can see there is some kind of demand, keeping your stop loss just below that candle itself, taking long position. And here also you can see 200 moving average support, keeping your stop loss just below that moving average, below that candle itself, um, below that candle, and targeting to this high. And this huge sell-off candle after this bearish engulfing, here also is another bearish engulfing pattern. Above that candle itself, stop loss targeting all the way to this zone. Just one candle of stop loss, guys. One candle of stop loss, and you can target a very good risk to reward ratios. And I hope you're getting, guys, what I'm teaching. And in coming to Nifty 50, as I have told you, here, guys, the market failed to make a lower low here and formed a bullish engulfing pattern over here at around 141. So if you look at Nifty, if you look at the Bank Nifty at 141, you can see at 141, you can see the same trade, guys. Here it formed a bullish engulfing pattern in Nifty 50, and the same trade at the same time, you can see here the price taking support from the 200 moving average, clearly showing some kind of bullishness. So with here in confluence that the price is taking support from 200 moving average, and in Nifty 50 where the price formed a bullish engulfing pattern and the price showing some sort of demand which failed to make a lower low, you could have easily entered long position here. So let's look at the 0 0 trade where you could have easily taken, guys. You can see at around this candle, guys. You can see at around 153. This is at around 141, guys, and here is around 153. This candle, guys, this candle over here, where the price broke this 200 moving average towards the upside. Our entry was at around 141, guys. You can see our entry is around 141. So this was our entry, guys. You can see clearly this 141 candle is our entry, keeping your stop loss just below that 26 and at around 30, entering a 4 points of stop loss and targeting all the way to this, guys. You can see from 26 to all the way to 122, guys. This is the power of compounding. Or you could have entered your long position after this bullish engulfing pattern over here. You can say price taking support from this candle over here. After this bullish engulfing pattern, you could have taken long position and targeted all the way. As long as the price is trading above the 9 as well as 21 moving average, you could have targeted all the way towards the upside. That's how you could have taken your position, guys, today. I hope you are getting what I'm saying. This bullish engulfing pattern, and you can see price consolidating over here. And if you look at put premiums, guys, you can see the market here faced some sort of rejection over here, and the price rallied towards the downside. But here you can see there wasn't much momentum. Even if the price was rallying, the price was making lower lows only. But you can see after this kind of rejection over here from the 100 moving average and price continuing towards the downside, only here you can see clearly that after this kind of bearish candle over here, bearish engulfing pattern, price rejecting from 21 as well as the 9 moving average, here is where you could have taken short position, guys, during this phase here, this zone, where clearly in put premium you can see price rejecting over here, and here it showed clear signs of bearishness, guys, but here you can see price is showing some kind of support, clearly showing some kind of demand over here, and you could have entered long position here somewhere here, guys, at around 30 to 34, and you could have targeted all the way to 120. This is about my hero zero trade setup, guys. I hope my video here is helpful for you. In case if you really find my videos helpful, guys, please like, share, and comment, and share this with your friends and relatives, guys. And please help my YouTube channel to grow and reach many people as possible, so even they gonna be benefited. That's it, guys. Thank you.